Hi guys, welcome back to Bulls and Bears Market YouTube channel, and this is our weekly roundup. So like you already know, this is where we give you the gist about what happened in the forex market and also the Nigerian Stock Exchange in the past week. We also give you a preview into what to expect in the coming week, so please come along with us. The major highlights for this past week has to be the return of the bulls to the Nigerian stock market. So we saw the market record their daily gains all through this past week. Also, all prices continue to take a plunge despite OPEC Plus's efforts at stabilizing oil prices. Those two were the major highlights for this past week. So the US stock market returned to being on a bullish run after a long bearish run. We saw the bulls return fully into the market. The market recorded back-to-back daily gains all through this past week, and this was mainly because bargain hunters returned into the market in this past week. So if you've been following our weekly roundup, you will know that we've been hammering on the fact that stock prices on the exchange stocks on the exchange are trading at record low prices, and so we saw investors return to the market to take advantage of the attractive prices of stocks in the Nigerian stock market. The market recorded a 7.2 weekly gain in this past week. So despite OPEC Plus's efforts at cutting back oil production and stabilizing oil prices, we saw oil prices continue to take a plunge, and this is mainly because demand for oil at the moment is just not there. So if you remember in our last weekly roundup, we talked about the fact that OPEC Plus had an emergency meeting on Sunday just to agree on the number of barrels of oil to cut back on. Also, in the course of the week, it was announced at some point that 20 million barrels of oil would leave the oil market, as in daily supply of oil will be reduced by at least 20 million barrels. I know despite all that, oil prices just continue to take a plunge, and it's because there's little or no demand for oil at the moment. We all know that coronavirus has led to lockdowns in different parts of the world, and so economic activities have dropped drastically, and so manufacturing activities are not there. I know cars are not being driven around. All of that has cut demand for oil at the moment. So until economic activities start to pick up again, until we start to see a bit of rise in demand, we may not see rise in the price of oil. So the currency market continued to trade within a range. We saw most currency pairs continue to trade within a range, and it has been like that for a couple of weeks now. So Euro USD continue to trade within a range. It turned bearish in this past week. It rose to a high of 1.0990 before dipping to 1.0812 before dipping to 1.0812 on Friday. Like I said before, it continues to trade within a range. All through the month of April, it has been trading in a range. On the long run, we expect that Euro USD will remain bearish, and this is mainly because of the economic impact of the coronavirus on European countries. We expect that economic indicators from Europe in the coming weeks and months will be negative, and that would negatively influence the euro in the currency market. Also, GBP/USD continued to trade within a range. It turned bullish. It moved to a high of 1.2646 in this past week, and then as it is later, it looks like there's nothing to spur activities. There's nothing to bring out GBP/USD from the range within which it's trading at the moment. But in this coming week, there's going to be a return to Brexit discussions. Brexit discussions will return in this coming week. Please excuse me for that. Brexit discussions will return in this coming week, and so we expect that will spur a bit of activity on GBP/USD in this coming week. USD JPY also had a bearish run in this past week. We saw USD JPY fall to the regions of 106 in this past week, and that's mainly because JPY is a safe haven currency, so it basically dominated its trade with the USD in this past week. Given the fears and uncertainty in financial markets at the moment, traders are sticking with safe haven currency, so JPY had a good week in this past week. Going forward, for the Nigerian stock market, we expect that profit taking will return to the market. The market has been on a bullish run for about 2 weeks now. I expect that investors want to take a bit of profit in this coming week. Trading will be mixed, but it will be dominated by profit takers. It will be dominated by profit taking, and so those are our expectations for the Nigerian Stock Exchange in this coming week. For the currency market, we expect that it will continue to trade within a range in the near term. A couple of data is expected in. CPI, that's inflation numbers are expected in from from Britain, Canada, and Japan. PMI numbers are also expected in from Europe, US, and Australia. Then retail sales and unemployment claims will come in from the US in this coming week. And given that coronavirus has been on for a while, we expect that we'll start seeing the economic effects on of the virus on these countries, from what the economic indicators will tell us in this coming week. So traders will be looking out for this data, and that will definitely influence how traders will trade these currencies in this coming week. That mainly is it for our weekly roundup this week. Thank you so much for watching. If you're yet to subscribe to this channel, please click on the subscribe button. Also, we are big on feedback here. We would like to know what your thoughts are on the financial market generally in the coming week. Go into the comment section and let us know your thoughts. Thank you so much for watching. We'll see you in our next video. Have a lovely week. Bye.